here's what happened. So if you've been following the Road to Profitability series, you know that the last video was day 2. Then I kind of disappeared. Let me explain. Basically, the Wi-Fi got cut off. We just didn't pay for it, and so I couldn't upload or continue posting updates. That's why there's been silence on this channel for a bit. But during that time, I wasn't just sitting around. I've actually been working on simplifying my system, and yeah, I've been going back and forth just trying to simplify it. The one I was using before was a bit complicated, too overcomplicated. So I stripped it down, and now I'm trading an order flow strategy. This is the way I personally know how to trade order flow. It feels more natural to me, and you might trade order flow in a different way. For example, other people trade order flow utilizing footprint charts. I don't utilize footprint charts, I utilize candlestick charts. Different ways we trade the same concepts essentially. So that's what I wanted to say, is that simplify the strategy, remove the confirmations, and right now still the same thing, still the same plan, just with a simplified strategy. Right now I'm currently in my backtesting phase, really testing the system properly before going live with it. I'm collecting data, refining entries, and making sure that I actually have an edge, right? And in this video I'll walk you through my trading plan, the plan I've built for this new order flow strategy, so you can see exactly how I'm approaching it. So yeah, that's what happened, and that's where I've been, and that's what's next. The road to profitability continues, just with a sharper, more focused strategy. With that said, people, I just want to say, let's get into it. So guys, this is my order flow strategy. This is Notion, if you're wondering what that is, and essentially it's just an analysis process as to how do we actually go about from entering M15, because this is where the strategy really works, from figuring out where we start from M15. This is the entire layout. From our entry to our stop loss, preferred system, and variations of order flow in my knowledge and how I have seen it. So first things first is analysis process. We need to know the process that takes us from step 1 to the very last step, where we close that system out for a win or a loss, depending on the market condition. You know, trading is math, and it's all probability, and the statistics in it, and we skew the likelihood of winning in our favor, so that we know the strategy can do this, and it's just after that pure execution. So I'll show you. This is the first step in our analysis process. Is, as every other trader is going to recommend out there on the internet, they'll tell you determine trend direction. It is important to know where you're trading. And here, this is a bearish market trend where we have a series of lower lows, lower highs, and then price breaks and forms this lower low, and we get a break of structure. I'm not going to really explain how all of this works, and what a break of structure is, what a lower low is, what a lower high is. There are a lot of people out there on the internet that can better explain this. I think I'm a very shitty teacher per se, my own thinking, but yeah, this is a complex pullback where we have a trend within a trend, but essentially this is a bearish market, and this is a bullish market. A bullish market is an inverse of a bearish market. Instead of having lower lows and lower highs, we have higher highs and higher lows, and we form a new higher high, getting that break of structure, get that complex pullback, then price rallies on again to form that higher high, continuation of break of structures, we are maintaining the lows and breaking the highs. This is just it. So once you've determined your trend, where are we likely to go? Are we aligned bearish? Are we aligned bullish? The second thing we're going to do is mark out our trading range. So we can only mark out our swing high in a bullish market only when we seem to have entered a correction phase. Like I said again, there's better people out there on the internet that can better explain market structure and market structure over multiple time frames way better than me. So please go out there and learn market structure perfectly. Like I said, I think I'm a shitty teacher. So we can only mark out our swing high in a bullish market only when we seem to have entered a correction phase, and in order to know this, we might transition to lower time frames and look for a market structure shift that confirms that we're now correcting to put in lower or higher low, sorry. So ideally this is our higher high or higher low. We rarely out creating a breakup structure. On the lower time frames, this will be a trend with higher high, higher low, higher high. Essentially, this is M15 structure. It's going to be one leg. On 5 minute is going to be a higher high, a higher low, and a higher high. What we want to see is price break this protected low to forming our lower low. This is a market shift. It's not a change of character. For me, there's two different things. There are two different things. So we get that market shift. Now we have a lower low. Price will push higher to form our lower high and correct lower. This is only when we know this one sequence confirms that the swing high has been put in and that the market is now corrective, meaning it's coming in to put in the higher low before it pushes out even higher. This is very important because we only know the swing low. The swing low would be our higher low, or the lowest point within a bullish trading range. That becomes our swing low. But our swing high we never really know because we can't mark this level because we see this shallow retracement, this shallow pullback. We can't say this is our swing high. As you can see, price continued and rallied on. Only when the structure on the lower time frame has shifted order flow from bullish to bearish, that's when we can confirm that the higher time frame will then start retracing, because there's this rule in trading that says in order for something to happen on the higher time frames, you are most likely to see it happen on the lower time frame. Before you get a change of character on the higher time frame, you more often than not, get a change of character on the lower time frame. It's the fundamental rules of structure across time frames. Bearish example: lower low, lower high, we get the sell-off, break of structure. Same thing on the 5 minute time frame, we got a series of lower lows and lower highs and lower lows. We can't put this in, our swing low can't be placed in here at this point because we think, oh, the market is retracing, and that shadow retracement might finally be the market entering the corrective phase. What we need to do is we need to wait on the M5 time frame and just wait for price to continue in its sell-off, get its lower lows and lower highs and lower lows until we get that shift, that market structure shift, and we get the higher high. We know that price has now transitioned from a bearish market trend to a bullish market trend only on M5 time frame, and we know that price is now going to put in a higher low, impulse higher, get that break of structure, higher high, higher low, higher high, higher low, higher high, and price is going to trade in our favorable area. This is it. We can only mark out our swing low in a bearish market only when we seem to have entered a correction phase, and in order to know, we might transition to lower time frames and look for a market structure shift that confirms the price that we're now correcting to put in our lower high. So first things first, identify your trend direction. Second thing is to mark out your trading range. This gives you a confined area, sort of like a box, as you guys can see. This is the low of the box, the high of the box, and your trade setup is going to form within this box. same thing here. It's in the box. So first, determine your trend direction. Second, mark our trading range, and the third would be mark order flow within the trading range. This is where we get into it. Okay, in a bearish example, this is the bearish example. Our order flow will be the last buying move before the sell-off. Yeah, that's just it. This is order flow. This is how I know order flow. This is how I've been taught order flow. So in a bearish example, our order flow will be the last buying move before the sell-off. And how do we print this is, how do we mark this on the chart is, we supposed to be mark, not make. What? Hold on. We make if, oh my god. We mark, it's supposed to be, we mark from the low of the first buying candle to the high of the last buying candle, or the last buying move before the sell-off. So if I enter this, you guys might be able to see it properly. Yeah. So there's essentially in the real charts, we're gonna see live examples, not live examples, but proof of the system. Is we mark the low, the wick, the low. You know, there's open, high, close. There's open, high. There's open, low, high, close. Yeah. We mark the low of the first buying candle all the way to the high of the last buying candle before the sell-off. This, in my books and in how I've been taught order flow, this is what order flow is. And inverse of that is going to be bullish order flow. If we can wait for it to actually pop up. Nice. So in a bullish market, it's the inverse of that. We are going to be marking the last selling move before the impulse higher, or the push out higher. So order flow, it's the last opposing move before a directional move, or opposing move, as you guys can see. So here we mark the high of the first selling candle all the way to the low of the last selling candle before this impulse higher. That's all you need to know. That's how I've been taught this. In a bullish example, our order flow will be the last selling move before the push out higher. We mark from the high, sorry, not make it. We mark from the high of the first selling candle to the low of the last selling move before the push out. That's essentially it. So now you know how to determine trend direction. You know how to mark out your trading range. You now know how to find your order flow, and now it's entry, stop loss, and take profit. So I did not put in a bearish example because really we're not kids. If you understand this, you're gonna understand the bearish example. Now bullish example, we set a limit order. This is going to be a limit order system. In the upcoming video, I'm gonna speak more about what the system's risk factors are and get a little bit deeper into that. But yeah, it's a limit order system. In our bullish example, we set a limit order where our order flow starts. Our stop loss gets set. Oh my god, gets set down on the swing low, and our take profit gets set at the swing high. So something easy. No one can really mess this up, to be quite honest. If you mess this up, I don't know, mate. You might need counseling, because this is extremely simple. Let's wait for that to come in. I don't know why it's taking longer. Might be my Wi-Fi. Alright, so the picture came in. So this is your order flow, your bullish order flow. entry is going to be set at the edge where the order flow starts. Stop loss is where the order flow ends. Take profit is the swing high. Why? We're understanding the rules of structure of a trend. In order to continue this bullish trend, we must maintain the lows and break the highs, and that's just it. And now, in this plan, I really wanted to include proof of system to show that the system really does work over and over again. You guys saw how long that first picture took to actually load up, so I'm kind of worried that the second picture, these pictures might take longer as well. But essentially, these are all of the trades that follow the exact system. Determine trend direction, mark out trading range, mark out order flow within the trading range, set your entry, stop loss, and take profit. And this is actually, you can go right now to USD JPY on M15 structure, and you will be able to find all of these. As you guys can see here, September 30th of 2025. This is when the screenshot was taken, sorry, but yeah, it was taken yesterday. All of these you can see, we were bullish and we had that breaker structure, we had the body closure above our higher high, and so now we form our higher high, and then price comes back to take out this protected low. This is an official change of character. I'll show you what a market structure shift is later on. So now we have identified the direction, the trend direction. We are aligned bearish. Why? We just got a change of character. The protected low, the low that we were supposed to protect, has been taken out, and now we know we can shift our attention and our bias to say we are now looking to sell the market. This is USD JPY. All of them you'll see USD JPY. All of these trades, if refined, utilizing depth of mitigation of our order flow zones, will be 1:3, 1:3. So all of them at the end of the month, at the end of September 2025, we made 20% with the system. Good profit, good profit actually. So now mark out, so we now know where we're trading at, where we most likely to target. Well, we are bullish, we are bearish, sorry about that, we are bearish, we're aligned bearish, we want to take the market lower. That's all we need to do. So this is our second thing, is know the trend direction. That's the first thing, we are bearish. Number two is mark out your trading range. This is our swing high, the highest point, and the lowest point of that expansion leg would be the swing low. This is our swing low. So now we have our order, we have our trading range, and we now know that our trade lies within this box. Now the third thing is mark out your order flow within this range. So I told you that a bearish order flow is the last bullish move before the sell-off. So from this candle all the way to this candle, as you guys can see, these are all bullish moves, and so this is our order flow. Now people will ask me, well, why didn't you set your entries here and your stop loss here? Now watch this. We get this sell off and we get out of our order flow. This is a fresh order flow. What happens? We buy back into it, mitigating this order flow, and then we sell off a little, and then we push out even higher. So this, realistically, if you're following the rules, I said it is the last sell-off, it is the last buying move before the sell-off. So this 1, 2, 3 candles, I'm gonna mark this third candle, though indecision, I'm still gonna mark it. So this is where my order flow is. This has become a mitigated order flow. You're gonna see variations of order flows soon. So this is my order flow. This is where I'm entering. Slightly, I was supposed to enter on the edge of this candle, but I entered on this bearish one. So that's a slight technical error on my side, but it wouldn't increase the risk to reward. But I'm trading a fixed system, sorry. I'm trading a fixed system. As you guys can see, limit order on the edge of the order flow, stop loss at the swing at the top of the order flow. So that's little bit discretionary about the rules where I said we must set our stop loss. Take profit is at the swing high, as you guys can see. We push lower and we actually hit our take profit. So now let's wait for the second picture to come online, and you guys will see how we continue trading this system. So continuation of the system, as you guys can see, this was the first trade we took. As you guys can see, lost order flow, we got entry, and then price pushes lower. Now, same thing, same rules. We're bearish. That's what we know. We are bearish. We got the breaker structure indicating trend continuation, meaning this bearish market is intact, and we are most likely to maintain this lower high and break this lower low. Now, same thing on my side, bit discretionary. My entry was supposed to be at this level. So what's the first step? Determine trend direction. We know we are bearish. We had a change of character. Now we just had a break of structure. This is confirmed. Second thing is, where is our trading range? Well, I've marked out my swing high and my swing low. That's good. Now third, mark out order flow within that range. Like I said, a technical error on my side. This is where our true order flow is. As you guys can see, we did not break and close here. That's a slight wick over there. We pushed lower and we entered in. This is not a mitigated order flow. Unmitigated, and then we pushed even lower. Form this consolidation. Above consolidations is relative equal highs, liquidity, and then we had the sell-off. So we had the last buying move before the sell-off. And where does our entry go? It goes at the edge. Stop loss at the swing high. Take profit at the swing low. As you guys can see, we get that TP hit. 2 out of 2 trades. Perfect, good stuff. As you guys can see, this trade happened at the 4th, between the 4th of September all the way to probably the 6th of September. Yeah, probably the 6th of September. This trade happened at, I believe, between 7 and 8 all the way to past the 9th of September. So 2 out of 2 wins. That's a good thing. We're following the rules. That's all we are literally doing. And yeah, let's get into the third one. We're going to analyze this one by one. And we're going to analyze this one by one. So this is a very interesting one. We had the break of structure. We know our trend is established. We are bearish. We have our range, and now we have this buy. Now a lot of people will be like, but then we had this bit of a correction, then we start buying. Is this not our order flow? Well, for me it really isn't. For me, all of this is my order flow. It's buying, it's the last buying before the sell. And like I said before, where does our entry go? Here, stop loss here, take profit here. Price goes all the way to our target. We hit our TP. And actually within this trade, within that previous trade, we actually hit another trade. When we mitigated our level, as you guys can see, if you are actually following internal structure, you'll see that we are printing lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And I believe this is our higher high, higher low, higher high. So we are bullish, and what happens, we mitigate our order flow. We got tagged in the first trade, and then we push out lower to form a lower low. This on its own could be marked as our trading range. We are bearish internally, and the last buying move would be this push higher, because this is a wick, but before that wick could even happen, price was at some point at this price point at 148.186. That was the valuation of dollar yen, and then of course sellers came back in and pushed prices lower. So our entry goes at the edge of our order flow, stop loss at the high, and then take profit. Because we're relatively trading within the swing range, this is where I place my stop. As you guys can see, we got 2 trades in one range. This is good stuff. and both of those trades were winners. So right now 4 out of 4 winners. That's good. It was a very good trading system. Here I'm going to show you, this is a very interesting trade. For me, there's also going to be a variation of that, and you're also going to see on the fifth trade, you can probably see by now, the fifth trade is also an interesting case study. But if we are looking in terms of rules and market correlation, we can see that time and time again, market actually correlates. Direction, we're getting breaks of structure, we had a change of character. That's the first important thing. So we shifted from a bearish market trend to a bullish market trend. And now we have continuation structure. Continuation signatures is our breaks of structure toward the upside. So we have our higher high, higher low, break of structure toward making our higher high, higher low, higher high. We see this, all of this is bearish. Bearish because these don't oppose it. But yeah, discretionary, this is our order flow. We have our trading range, so we know our trend, we know our, what is this? We know our trend, we've marked out the trading range. We now have identified our order flow within this range, and our entry goes here, stop loss here, take profit here. This was a 1 to 2 risk to reward ratio trade. How I like it is I go normally for a fixed 1 to 3 off, but this was also an example that sometimes your range is not gonna really give you that 1 to 3 off trade you are looking for, but it could be slightly adjusted utilizing another thing. I'm not gonna go into it. I don't want to share my strategy. This could have been adjusted for a better risk to reward ratio. I didn't show it on this chart because I don't want to give out my entire strategy for free. So 5 out of 5 winners. So for the month of September 2025 on USD/JPY, we had 7 trades. All of them 7 out of 7 are winners. So we hit our TP here, but then now we had a breaker structure. We know our trend. Identify a swing low. This is your swing low and your swing high. So determine market trend, done. Mark out your trading range, done. Mark out order flow in your range. So it's the last selling move. So we see this is the last sell off, and then price pushes out higher. This is interesting one. I like this example more. Price starts to have that push out. As you guys can see, we close above our order flow. Yeah, close above, body closure above our order flow. And what happens right after? We get the sell back in, mitigating our order flow. This for me is a sell. This is the last sell, and what do you see? Between this candle high and this candle low, we are ranging, and then we get that push out. So this is for me my last selling move, because this has become a mitigated order flow. We don't use them. We don't use those. Mitigated order flows is a no-go for me. And we mark the high and the low. Mark the high of the first selling candle to the low of the last selling candle. That becomes our bullish order flow. Entry here on the start of the order flow zone. Stop loss here, take profit here. As you guys can see, we push out a beautiful trade. It is 1 to 3 hit TP. So that was our 6th trade. So right now for the month of September 2025, we've taken 7 trades. 6 out of 6 have been winners. Beautiful stuff. We're just waiting for the 7th trade to actually load up, and you guys will see it. So apologies for the way I speak. I might be scattered all over the place. I swear I'm going to get better as time goes on. So as we see, we have our break of structure toward the upside. This wick got us out. As you guys can see, the data pushed lower. Get that choppy sideways market, really making no progress, and then push out even higher. So we got that break of structure toward the upside. Like I said, breaks of structure are continuation signatures, so the trend is bullish. Mark out your trading range. Now we have our swing high and our swing low. Now this is another variation of how we mark an order flow. You guys see that all of this is a sell-off. It's the last sell-off before the buy. And I agree, from this high to this low, that is our order flow. but normally what I do is I reduce it to the last 3 candles. So this entire zone becomes my order flow. Yeah. And then same thing, same concept, entry here, stop loss here, take profit there, price comes in, mitigates it, beautiful, and we push out higher. Yes, this trade again can be refined for a better risk to reward ratio. For a better risk to reward ratio, utilizing something I'm not going to mention in this video. So I've showed you 7 trades of actual examples, actual live market. You can go actually research this yourself. Go to USD JPY from the start of September all the way to the end of it, and actually follow the steps I've laid out for you. Step 1. What is step 1? Here we can see determine trend direction. Step 2, mark out your trading range. Mark out your order flow within your trading range. Where you set your entry, your stop loss, and your take profit. I believe I've showed you not even cherry pick. This is actual live performance of USD JPY on M15 structure for the last month's performance. Go look at it yourself. I don't want you to say that I'm cherry picking all of this. You're going to see it as well, unless if I'm seeing some form of ridiculous price action that I have no idea of. So this is variations of order flow. Variant 1, it would be our mitigated order flow. This is essentially it, where we come out of an order flow, come back in without even pushing and breaking structure. This becomes our last selling move, and then we push higher. So yeah, looking at this, it's fresh order flow. That was the last selling move before the impulse, and then we push out and we have a higher high. We were having lower lows, lower highs, lower lows. We push out. Now order flow is fresh, and what happens? This mitigates our order flow, and we now have a new order flow to look at. That last selling move that mitigates our first order flow becomes our new order flow. So this last selling move that mitigates this previous order flow becomes our new order flow, and this is how we make it in. And this is where you set your stop loss, your entry, and your take profits. I believe this is a very interactive strategy. You can't really say it's complicated in any way or form. Same thing as this, fresh order flow. That was the last buying move before the sell-off, and then this mitigates our order flow, and we now have a new order flow to look at. That last buying move that mitigates our first order flow becomes our new order flow, and I've showed you how to actually place in your entry zone. So guys, really that's all there is to the strategy. I'm pretty bummed out about the fact that I shared that with you, but yo, who cares? At the end of the day, I've done my job, I've done my part, and I've been backtesting this. You guys can see I don't really mind showing you. You now know everything. I'll just tap into my data, my backtest data set, and I'll show you the month of October 2024. As you guys do see, first week we had no trades, second week we had 3 winners, third trade overlapped to the next week, third week we had 2 trades, 1 winner, 1 loss. What the hell? Yeah, this is the first week, second week, third week, fourth week. Is this the 5th week? Insane. But yeah, as you guys can see, this is how the strategy managed to perform a over 10 trades actually. So out of 10 trades, you guys only see 2 losers. So 8 out of 10 being winners. Profit factor, I'm not going to click into any of these, but that's all I really wanted to show you guys is the system and how the system works, and the fact that it works. Like, I've listed down an entire trading system. This is the same system that this year has shown profitability. You can go back and look at last month, because it's October now. You can go back and look at last month. You'll see, and you follow this exact step-by-step framework, you'll see these. So with that done, I've showed you how I've basically stripped the strategy from before with overcomplicated concepts to just simplifying, pure and um, pure and trading essentially. And I've showed you proof of system. The trading plan has proof of system to show you that this system actually works. And the proof of system is actually in line with expected performance of how I want the strategy to ideally perform over a course of a week, over a course of a month. Of course, we're opinion around EP, but right now you don't really understand what I'm saying. But these are things we'll get into a little bit later. But for now, all I can say is, yeah, that's what happened. I really wanted to explain properly what happened, why we have 85 days of no posting at all. But hopefully you not see that. That's it, people.